We got Packy in the waiting
Let's
room.
bring him
Let's
in.
bring him in.
Let's bring him in.
I wish he was here in person.
He can do that. He can do the wander. Oh,
There
he got
he
the
is.
ramp hat
Oh.
on.
There we go.
Ramp day.
Hello,
Ramp
brothers.
day. Hello. Welcome to the show. Good to have you here.
Oh my God, it's great to be here. Long
Yeah.
time, first time.
First of many. First of many.
First of many. Yeah, break it down. What happened today? Why are you wearing a ramp hat?
Take a victory lap.
Take a victory lap.
No, I always wear a ramp hat. And,
I love it.
I've heard that TBPN is just unbiased journalism, and so I wanted to join you for an unbiased conversation.
Exactly.
Yeah, unbiased.
on
Zero
presenting
bag
the ramp.
holders
kind of
here.
fintech space.
Yeah. Guests and hosts of this podcast may hold securities by the presenting sponsor of the show. Anyways, great to have you on, Packy. I wanted to go back to March 21st, 2022, when you, this was like probably your second time covering when they announced their $8.1 billion valuation.
That's
and
was that the back-to-back round, the double round or whatever?
I mean, every single round for a minute there was, you basically would read a ramp fundraising announcement,
They were
close,
speed running
you'd close
for
the
a while
information, and then you get a notification on your phone that said "Scoop, ramp is raising another round."
Yeah, it was wild.
Yeah, that was the eight point. That actually might have been the third piece. I think the first time I wrote about them was December 2020. I think we didn't talk about evaluation, but I think they were valued at 300 million at the time. So like something just pathetically
I think like
low.
seed and Series A at that point.
Yeah, that's like a personal kind of net worth type number. And then the next time I wrote about them was when they had raised back-to-back rounds. I think it was like 1 billion and then 1.6 billion.
So I have it here.
Stripe
The first time.
And I spent a lot of the time in these pieces, one, just being like, praising ramp, obviously. And then two, kind of justifying that, if you're growing this fast, like these valuations kind of end up catching up. I think there was a period in between. They took a down round. They took their medicine in 2023, but now they just kind of continue to grow fast, and we're back way above that $8.1 billion valuation.
Yeah, thinking about the ramp down round was directly tied to the market, not business performance, which is why they're back above that last financing. Just given that. They were taking that down round while still putting up ridiculous numbers.
And also, I mean, down round is like, Facebook did a down round at one point, but down round can mean so many different things. And like, I saw some down rounds during that year that were brutal, like pay to play, total cram down. Yeah, it's $100 million on 50 pre. So the new investors are taking 2/3 of the company.
Yep.
And then, there's a 10% option pool for the executive team or something like that. That's like going to get rolled out. And literally anyone who touched the company for the first half decade that they were running it is just gone, wiped, like didn't exist, never thing. You got paid W-2 wages. I hope you put some in NVIDIA stock because you got nothing now. And it was like, that happened all the time. And it was like, terrifying, but it happens. I don't know.
Yeah, I was on the other side of a few of those, but I remember reading about the ramp piece, the ramp down round when it happened. Yeah, and that's when I really knew. Like I think in 2020, 2021, you can be impressed by a company, but a lot of people are growing fast. A lot of valuations are going up. Yep. When you read a story about in this terrible market, a company doing a down round, and it's like pretty much gushing, and all of the commentary around it and Twitter and everything about them doing a down round was gushing commentary on how smart it was for them to kind of just take the hit and keep going. Yeah. That's when you got a company that's pretty special on your hands.
Yeah.
So you're talking about ramp safety?
Yeah, so this is John's.
So Packy, like obviously, like Ramp's moving really quickly. We're worried about a future where Ramp is like closing the books so fast that like you go to ask Ramp to close the books, and it thinks like if we didn't have any humans, we would never need to close the book. So it just kills everyone.
Yeah, Ramp AI.
Yeah,
we
kind of like
safety.
a Ramp doomer scenario. Like, should we pause Ramp? I've seen some people throwing out open letters, maybe trying to lobby the government to slow down Ramp. What do you think? What's your take?
It's tough. I mean, I think it's a real risk. I think pausing doesn't work though, right? Then the Chinese are going to start, closing the books faster.
Great point.
So you can't do that. The thing that I get worried about is that you run out of atoms in the universe at some point.
True.
Right? So like,
That's
if
a
you're
good
an
one.
investor and you're thinking
Yeah.
like, can they continue to double every year?
Yeah.
Like at some point you run out of atoms in the universe. And so
Yeah.
that to me is kind of one of the bear cases, I guess.
Yeah,
I guess
I
we're
think
all
of
dead at
Ramp
that point.
generally is what they're doing is like they're building a machine god that lives in your CFO's Chrome tab, but ultimately it will be a beneficial, benevolent machine god
Right.
that lives in your CFO's Chrome
That's
tab.
focused on saving you time and money, and
Yeah.
it knows its lane. Right?
Exactly. And so in a post ramp society, kind of like a post AGI, post ramp society, I think humans will be doing fantastically. I think it'll be great.
At least the CFO suite will, right? Like, they're going to get all their time back
That's
to be able to
honestly
think
what-
strategically
that's
about the business, about life. So I think that's one of the things. My dad is a CPA, and so like I just think when I write about Ramp, I think about my father. Right. And like how many basketball games, he could have been out of mine had Ramp existed.
Wow.
Oh, wow.
At the time. I mean, the guy was, he was a business consultant who was traveling, all the
heartstrings.
time. He'd fly to Germany for the day and fly back. And like, imagine, Ramp's AI just does that for him. Right. And like, we're hanging out. He knows me better. I know him better. Like, and I love him. He's a great guy. But
It
I'm
just suddenly
saying,
gets super dark.
That's amazing.
Packy's like, my dad never made it to games in the first 15
No,
days
he
of the
actually
month
did. It
'cause
was,
he
it was
always-
like
he
pretty
was always-
incredible that he would like fly back. He would take the early flight back to
That's
make it
crazy.
to my stupid
Yeah.
game. So good on him. I just mean he'd be like a lot less tired had Ramp
Hey,
existed.
I'll give a
instead of having to
personal
make those flights.
anecdote. I got to hang out with my kids this weekend because we're on Ramp, and it just the books close themselves. Pivoting a little bit, John and I were talking this morning. There's too many top signals to count right now. Everywhere you look, you got Trump coin, you got Cardano going into reserve, you got OnlyFans competitors doing something. We don't know. And we got humanoid robot companies with one customer raising at 40 billion.
What is BMW's valuation, by the way?
Yeah, that's a good question.
Oh my God. If it's less than 40 billion,
It's 50 okay.
Ford is less.
It's 53 billion
53
euros.
billion euros. Okay. So, yeah.
So what's that in USD? Like $12?
50. We're mogging the euro these days, but
yeah, it's probably 50 billion.
yeah.
US.
So yeah, there's definitely a bull case to be made of why figures should be worth as much as their customer, their first customer. But anyways, how do you think as an investor right now, we're clearly living through one of the greatest times in history, right? We just had a private spacecraft land on the moon.
Yep.
Elon's launching rockets every day. There's austerity in the government, which is potentially bearish for GDP short term, but probably good for the dollar long term.
Yep.
How do you think as an investor and even a writer and somebody who's called a lot of trends, early, what do you think the next, talk to us about the next 5 to 10 years?
Oh, the next 5 to 10 years. What's I found really fascinating is that a lot of the stuff that I'm not investing in has been super overvalued. And then a lot of the stuff that I've been investing in has been undervalued and underappreciated. And I think it's going to be worth like a lot more in the next kind of year or two.
Sure.
So that's kind of my take. I'm not a figure investor, big fan of their videos. And actually my daughter loves figure videos and was like really psyched to see two of them together. I don't know. I mean, I think like there's a lot of probably overhype in AI. There's probably going to be like a couple of $10 trillion AI companies that are going to pay for the whole thing. Humanoids scare the hell out of me as an investor because it's like this really impossibly hard thing to do with a lot of really, really smart people working on it, where like if you pull off this impossible thing, then you're competing against these 10 other companies and like who wins? A big consumer surplus event. But there's like human labor doing things. There are some people I've heard who don't just kind of podcast and write, who like, you make cars or whatever, physical labor.
Yeah.
I think like, human salary and wages and all of that, it's like $45 trillion. It's like half of the world's GDP. And so like, if you underwrite robots as like some small percentage, I mean, I think Figure already got like 0.1% of that GDP, got credit for 0.1% of that GDP, which is pretty amazing. But like there will be like massive companies built here. And I think there's also going to be a lot of people who lose a lot of money. We could talk about what's happening in venture. I think it's like I think like the big funds are actually super well positioned, and there's going to be a lot of these like emerging-ish funds who try to compete, who I just think get kind of like wiped out. I don't know. I think there's going to be like
do you have a take on General Catalyst going public? That's a good one.
I don't have a good take on that.
Oh, okay.
I mean, it's like, it's a really,
I would say like one of the, when I think back of one of my favorite pieces of yours over the year, I'm not going to know the title, but you had a really great deep dive on this idea that as our tools become better and more efficient, a group that, a company that would have taken 100 people to build, 5 years ago now only takes 20, right? And
Yep.
I think we're really seeing that right now in AI, where you have companies like Cursor, a big one, with 20 people doing 100 million of ARR. It's been amazing to see that play out. Take a victory lap there, maybe double click in and share some more insight. But I feel like that was really, you basically called that and did it in a very eloquent way. But I think I expected it to be something like maybe like 5 years from now that would be the case, but it feels like it's that way like today.
So there's a few different ways that goes, and it's really like there's the Russell conjugation where like the person who's doing something different than you is doing it bad, you're doing it right, whatever. And like I literally think about this a bunch when I see all the charts of these companies making like more money than Ramp faster. I'm like, that's actually like way too fast, and that's totally unsustainable. Ramp, however, is like actually growing perfectly. 100%. But that really actually goes through my head. Ramp is doing it just right, but they're not. And I think I'm actually
bigger growth rates
for like,
scare me.
Yeah. The bigger growth rates scare me. It's okay. Your growth rate is perfect. Growing faster is unsustainable. Growing slower, disaster. You're growing the perfect rate. The Goldilocks effect, the Goldilocks growth rate.
I mean, that's just that's Eric and Kareem just doing what they do. I think it's just like really nailing that.
That's hilarious.
But I do think like, there is something about that like really actually does scare me, that fast growth, and just like how easy it's become. So really you can build more with fewer people. I took to me kind of two different things. Like one, it just made me scared. And this was like back in 2022, like really scared about software in general, because you can go out and build with 5 people, a company that grows really, really fast. And two, I think the other point of that essay was because we have better tools and because you can do more with fewer people, startups should be able to just like actually start fresh and compete with these companies that you never thought that you'd be able to compete with. I'm writing, a follow-up on Primer right now, which is taking on K through 12 education, taking on public schools, like not a group or a group of incumbents that like you thought you'd ever be able to take on. And I think they actually can. You can like put education on a Moore's law like cost curve and make education better for less and less money. And so like that's pretty amazing. Obviously, Anduril, is like starting to approach kind of Prime's valuation. And so like that I think is like the really exciting part of it to me. Less that 5 people can build things really, really quickly, and more that 100 people can build things to take on like these really old, big companies.
Yeah.
What's your AI stack? You've been a little bit critical of AI's writing ability, which I think is fair. We also, we have Coogan's benchmark, which we do about once a week, where we get the latest model to try to tell us a joke. And it's pretty...
It's hilarious when you read it like you're a stand-up and it just bombs intentionally, and it's funny to watch someone bomb intentionally. So it's good in that regard.
Yeah.
But
how have you been? What's your AI stack? And
what's actually useful?
I mean, I still use Claude and ChatGPT and Grok to just kind of like, if I don't understand something, I'll throw it in, or like to make sure that I have explained something the right way, or to get feedback
better
on
Google
an essay.
search, basically.
What's that?
Like you're using it like a better Google search, or like better
I'm
Wikipedia,
using it like
Google
a better
search,
Google search, and like just a little safety blanket on the like. I don't have an editor, so somebody to like tell me that this isn't like the worst thing I've ever written.
Sure.
4.5 is actually a little bit better. It stopped doing like the thing that killed me that I've tweeted about a couple times recently is like the M dash. It's not just blank M dash. It's like a totally different blank. And 4.5 has actually stopped doing that, which is really good, because I would see that in people's writing and it just like it really made me hurt. But
what was the PG one? Delve.
But you know what's funny? I when I read older stuff that's like that totally predates, I find Delve in it all the time. I think PG might have been wrong on that. People use Delve a fair
interesting
amount.
Yeah. I thought there was some weird round tripping thing where like the RLHF team in Kenya that OpenAI was paying to do the RLHF stuff had learned English in a very proper way, and so delve
into
was
this.
one of the words that was like in the vocab like course that they all took. And so they thought that it was like a much more popular phrase than Americans think. And Americans use it, but just not all the time. So it's kind of weird. But I mean, you'd see these aberrations all the time where you'd be like, write a tweet and it would like use hashtags. And it's like, that's kind of what a tweet is, but not really, not today. It's not a banger. Like no one uses hashtags. Or if you do use a hashtag, it's like in this funny, like kind of meta ironic way. It's not just like, anyway. So give me some other hot takes on.
I mean, I literally just asked it today because I was trying to, make my own joke for this podcast. The joke that ended up becoming, the fact that with this unbiased conversation about ramp. There's like that one phrase, like no bias, no something,
no conflict, no interest,
no mercy,
no
malice.
conflict, no interest. So that's what I was looking for. See, this is. So I said that. I said no bias, no ... Yeah, and it was like very confidently, no bias, no bet. It's like,
no bet.
Like, what you're thinking of, I was like, no. It's like, the phrase you're likely thinking of is no skin in the game, no opinion. Like,
oh my God.
And Jordy got it in 2 seconds.
I like no conflict.
Still
no
got
interest.
it. Not a paperclip yet. What's going on Substack these days? They've got some like social activity that's happening. It seems to be picking up. You're still writing on Substack, correct?
I'm still writing on Substack. I've seen a lot of conversation about, people going over to Substack. You can use links there. It's a friendlier conversation. I have not done that at all. And I think, my people are on X. We're on X live right now, right? Is this our first live X episode?
It is.
First ever.
You can go retweet it right now. Don't get too distracted. But I don't know where you want to take that.
Oh,
but,
no,
I just Substack, like as a company, seems to be doing very well. Like last time I saw Chris, and I got like some kind of, I don't know if I should even say, but like,
you should say.
Some reference on like, oh, I'm like hiring an accountant that worked for them, and they're like, oh yeah, it's actually pretty good business. And so congrats to the team. I think they've done really well from a company that was like kind of like maybe overhyped at one point. It's like, oh, it's like playing in the social network.
It seems like
they built a really solid business.
Broken through the cultural norm.
Yep.
I see it on Instagram.
Yep.
And my question to you is, you pay them 10% of your gross revenue, right?
No,
I don't.
He does ads.
Because you don't do subscription.
He, unlike the All In podcast, run ads. This is why he's on the show.
There we go.
You got to run ads. I mean,
he is an ad respecter.
Ad respecter.
We're both, Ram sponsored, obviously Wander portfolio company, longtime friend of the newsletter. And you just feel good getting to tell people about that. If I were, there you go. If I were a subscriber business, I wouldn't get to tell people about Ramp.
There's not nearly enough ads on the screen right now. We need more. So everyone has a sponsored hat right now.
There we go.
Jordy's got Bezel. I got the Wander. You got the Ramp. Be sure to look down so I can see the logo. There we go. That's good.
There we go.
But yeah, so I mean, he is kind of a bit of a failure mode for Substack.
I am. Well, it's funny because people will ask me like, what do you think about Substack? And like, you've talked to the team, obviously, and like, I actually have never talked to the co-founders. I've talked to one person at Substack once. Wow. Because
you just go.
I'm like the worst possible business for those guys. I haven't paid $1 to Substack.
What do you think about this idea that like they should be doing the bundling and aggregation on their side, where like you should go to Substack, somebody should pay $20 a month, and they should get, like you and Pirate Wires and Barry Weiss's free press, like all instead of those folks like leaving and you monetizing elsewhere. Like, do you think that makes sense, or is that just like a crazy idea?
No, it's a good idea. I mean, it's the idea that everybody I think has, that they should do that they should build an ad network, that like there's all these things that are like clearly good for business. That actually, I think in practice, like when you're like dealing with people who have kind of like egos and think that their own thing is like the thing,
most important,
are really, really, really hard to pull off in practice. Like I wouldn't want to be part of a bundle. And so I think that ends up being a challenge. Same with, like Ramp is not going through an ad network and buying like remnant slots, right? They're partnering with, just top shelf people, kind of shows and specific people. And so I think the ad network stuff falls apart there. I really like what Substack is doing for the simplicity. Like I in the beginning was definitely somebody who thought that I would move to a different platform. I wanted more customization, whatever. Like you'd have to pay me a lot of money to move to a different platform now, just because it works really, really well. The core product that they built. Yeah.
Have you ever experimented with a paid offshoot? Because I know you've done other offshoots. Like, what was the Thursday white pill one?
We did the Friday, the weekly dose of optimism.
Weekly dose of optimism, which is kind of like offshoot, but that's still free, right?
It's all still free. We could. I don't want to write more. If anything, I want to write less this year.
Sure.
And so I think I don't want to
Bangers only.
Bangers only. I don't want to limit what I send.
Exactly.
And I actually don't know. I like at this point I'm in too deep, and I don't know what the conversion rate would be, and maybe it would be incredibly embarrassing. And so I'm just going to stick with what I got.
There you go.
Love it. Where you mentioned earlier, you've been finding companies you feel are undervalued. You obviously have an insane top of funnel, right? You're broken through the mainstream. If I ask somebody that is on X, they know who you are. If I ask somebody that's kind of even LinkedIn mode, like they usually know who you are, right? So the top of funnel must be the top of funnel must be crazy.
I heard that.
But where are you excited to be investing right now? I'm sure you're flooded and doing a bunch of AI, but at the same time, it feels like an interesting time right now where you maybe wouldn't want to invest in the next humanoid robotic, company. You probably don't want to be investing in more defense, like net new defense tech companies that are just incorporating today. What's got space feels like in many ways there's more opportunity than ever because the cost to get up there has dropped. But where is exciting to you? What's the weird stuff you're looking at?
Yeah, really like the way that I've been thinking. Like my catchphrase on this is Anduril and SpaceX for everything. So as opposed to like you see Anduril and SpaceX, the move is not like go do the second best version of that. It's go find that in the other industries. So like a base power company or Somos Internet doing telco or Primer doing education. Like find the thing that is going to go win that category is really what I'm looking for. And those end up looking weird. So I was kidding about the stuff that I'm investing in being undervalued, but I do think that because it doesn't really fit a thesis that a fund would have on defense or whatever, it is a little more affordable than a humanoid company or a foundation model company for sure.
Yep.
Yeah, I mean, stuff in like power, energy, deeper in the supply chain, way far away from the core hot AI consumer stuff. There's going to be more reasonable prices there. Also, are you looking at bio stuff yet or bio adjacent stuff?
Oh, we've been doing a lot of bio stuff.
I imagine.
I think hot take would be cancer is probably gone in 10 years. I think is one of my favorite hot takes. There's just so many different attacks on it, and CAR T-cell therapies are doing well, and it's a matter of kind of scaling those out.
Yeah, I'm sure you read Sebastian Malabai's The Power Law. I'm sure you've read Sebastian Malabai's The Power Law. Yep. And before that, he wrote that book on More Money Than God about hedge funds. And so his whole thing is like, go and find the group of people that are making trillions of dollars effectively, or like really moving capitalist markets, like the biggest power players, and then write the definitive history and profile of them. And so I went to a speaker series with him, and afterwards, somebody comes up to him, he's like, what's the next book you're writing? Because that's where I want to be investing today, right? And he said bio. He was like, I think that the next book I write will be about like the flagship pioneering, but also the biotech public companies and then the biotech funds. And so it's something that I've certainly been meaning to get more up to speed on. I have a lot of friends and co-founders who have done like the
I have
PhD
to say,
stuff,
it is hard. Bio is hard. Like I compared like of all the other things, Elliot Hirschberg, who I've been working with on the bio side, who's Stanford PhD in genomics, and he, like without him, I wouldn't invest in bio. You see other generalist investors investing in bio, and he'll be like, that is the dumbest fucking deal I've ever seen in my life. Are we allowed to curse on X? Dumbest deal I've ever seen in my life.
You are allowed to curse on X, but what would your mother say? And we will shame you for cursing generally, because this is a friend.
Our kids watch this
kid-friendly show. Our kids watch the show.
Oh my goodness. I'm so sorry.
We don't curse personally, but do whatever's right for your brand.
Yeah. They're
if you want to have like a low tier, like I know you're an Irish guy. You're up in Boston getting drunk and hammered.
Patrick,
Packy McCormick, having some beers, throwing some curse words out.
No, all to say, bio is incredibly exciting, and bio is like a really funny one where I think like people get really excited and really like, oh my God, like they told me that they're going to make people live till 250 years old. They're definitely investing in that, and people are going to lose their share. But
at the same time, it's like every category is hard until some power law company comes along and makes it look easy. Like Anduril, hardware was hard, and now there's there's a new hardware company like every 2 days, and then they can't like beat Anduril necessarily overnight, but they can like sell and get deals and then sell to Anduril, or like create value, or like there can be good deals done in hardware now, even though like hardware is hard.
Totally. I mean more just like, and this might just be me calling myself out on it. What do you have, like millions of people watching this right
Billions.
now calling myself out for being stupid, but like just the vocabulary of biology and like understanding how that whole thing fits together. It's just like a totally different beast, even I think compared to hardware and other things.
Yeah, one of the things I've been sort of realizing around everything deep tech, hard tech, biotech fits this is within software. We went through a 20-year period in Silicon Valley where software entrepreneurs could go out and make these sort of outlandish claims around the products that they would build, but then just go and do it, right? Because the software is hard, but you can kind of make the pixels like, you know, work and whatever. It's code, right? We know how to do it. And then in hard tech, it's very different. You know, Elizabeth Holmes, like I do believe she genuinely believed that she could build the blood testing device that only needed one drop, but then like physics got involved and it was like, I gotta tell you to pump the brakes there. So it's been interesting to see that play out where for you as somebody who's a definite optimist, somebody that wants to believe in human potential and the ability to build great things, you probably have to dial it back at points and say like, I want to believe this is real, but I'm not going to invest because I can't kind of reach that conviction threshold.
Yeah, I have said, and I think this is fair for me, not for people who are better at science, but like I'm trying to actually moving closer to the Series A now and like not doing deep tech because like I'm not the guy to underwrite the science. And if I'm like the investor that you're calling to have something that has a bunch of science risk in it, like I shouldn't actually be. It's more like the furthest out proven thing and putting a bunch of those together into a company. Gentlemen, I have to leave you.
Can I get a minute?
Yeah, you can get a minute.
Okay, as the godfather of Solana, the guy who kicked off Solana Summer, you gotta give credit. You deserve some credit for that. Give us your 30-second take on the strategic reserve. It would have been unimaginable to think that the U.S. government would be buying Solana, but you probably, maybe I wouldn't be surprised if you alluded to it. What's your 30-second take?
Oh man, my 30-second take is that it's also dumb right now. Like I think Solana is great. I think it's like fast tech, and I think at like some point in 5 years, a lot of finance is going to run on Solana, on ETH, maybe on Sui, or like a lot of. I think it's inevitable that more and more finance will move over to crypto stablecoins, and having Stripe behind it is like a real thing. Any strategic reserve that has Cardano in it is just, it's a joke, right? Like it's like,
not to get political.
There's a bunch of like, and I'm guilty of this too. There's a bunch of dog that caught the car stuff going on, I think, in crypto right now, where it's like no regulation, strategic reserve. And we're like, this is actually kind of stupid. Like not this way. Like this is not what we've been.
Yeah. And Bitcoin's down 8% today and basically round tripped back to where the announcement happened, which is so bearish. Like that's the US government is buying crypto and everybody's bearish, but I know you have an in-person meeting in like 4 minutes, so sorry for making you late for that.
No, this is great.
Thanks for coming on.
Great. You're welcome.
Look forward to the
we'll
next
talk to
show.
you soon.